Oh, there you go. Let me check out if everything's going well. Good evening, everybody. And we're live. We are back again from Manurewa, live from Manurewa, Clinton Park. Me, I'm Jumi Bukoran of Grow Yourself, and my partner.
Hi
We've got
everyone. Good evening and welcome back again to one of our episode 17, which is unlocking your home ownership with ANZ Mortgage Broker Expertise. But then I am again introducing myself. I'm Mary Ann Honrubia from Ray White Manukau. And Ate, we have a very special guest for tonight. Yes? Would you like to
I
do
know. Yeah, probably you can go ahead. But before that, let's give a quick description as to who this is. Of course, I've invited my personal, not really personal. I personally invited her. She is our mortgage broker, not advising us with any other stuff, but because she works for ANZ, not for me. So you're gonna very straightforward answer from an ANZ mortgage broker. So this is a very special discussion, and it will give us a lot more information about other services and products of ANZ. Furthermore, Marianne, would you like to introduce her furthermore?
Yes, and of course, as what we have, we just quite a quick touch with the background that we've had before. So of course, we've invited people from different backgrounds that can help us with our journey of buying our first home. So, we've had our broker, we have a lawyer before, a solicitor, which is we have another lineups at it for the coming weeks as well, like very special people. But I think as what I've been mentioning to them off the record earlier, I have been dealing with a lot of our kababayans, which are who are starting to kind of start their journey of purchasing their home. And the thing is, like, we've heard the side of a broker before, and then now we want to hear actually straight off from someone who works directly from a bank, because we don't
Yeah.
know how it works. We see at least the benefit of working with a broker, an independent broker, and now we would like to see someone who's actually really from a direct bank. Like, how do they actually go about with the process and the journey of them if you go straight to them?
And it's not just a bank, ANZ is one of the biggest bank here in New Zealand, and I think in
Yes.
Australia as well. So this is not
I
something you will
think
just
the
lightly.
I think the thing is that you can also access ANZ even when you were in the Philippines. That's what I've mentioned before at that, because
Yeah,
before I
yeah,
even moved to New Zealand, I have been able to actually access an ANZ account. I've opened my account before I even become a student in New
yeah.
Zealand. And I think there is an office. I'm just not sure. Maybe Paula might know. I don't know. But there is an office of ANZ in Makati in the
Let's
Philippines. I don't know.
know more
Yeah,
from her then.
maybe it's
Let's
a contact center.
probably let's get to know more about uh
Our guest.
buying, first home buying from Paula. Let's welcome Paula. Thank you so
Hi
much, Paula,
everyone.
for gracing the show.
Hi.
Right. And
Thanks for
you've
the
mentioned a
wonderful
while ago,
intro.
yeah, you've been working for ANZ for 40 years, and I was like, wow, you
Yes,
definitely know the ins and outs of everything about ANZ services, eh?
there's a lot of things I have done within the ANZ. There's a few things I haven't done within the ANZ. One thing I haven't done is been in the collection side. So if you don't operate your accounts correctly or your home loan goes into arrears, I haven't worked on those sides. I know how it's good to be able to lend it out. Getting it back, I haven't had that sort of experience.
So
Just
you're
stay away
just
from
getting
that. Those conversations are too hard.
yeah,
But
fair
yes, I've
enough.
done 40 years just last October with the ANZ.
Wow,
It's
congratulations.
time. Yeah, thank you. It's been a fantastic journey. They're a very good employer. So yeah,
So that's
yeah,
probably inspired you to stay that long, 40 years. Can you imagine?
yeah. It's just gone. It's gone fast. It's gone past quite fast.
So I
It
have
wasn't.
All right.
Paula, just a quick question. So you're a mortgage
I'm,
manager,
I'm a mobile mortgage manager. So
mobile mortgage
I'm
manager
from
of
the
ANZ.
yes, I am. So I'm salaried wage earner from the ANZ. I like to keep the word broker out of my title, just to not to
Okay.
use it with an independent mortgage
Yes.
broker. And to me,
Yes.
being external, I'm a mobile manager. So just mobile manager.
Okay. And have you been in this position for long, or you've been kind of like tried different positions within the ANZ?
Within ANZ, I have done lots of different front of office, back of office jobs. I've been in the mobile manager role for just on 10 years now. 10 years? Yep, 10 years. It's the best job I've done all my time with the ANZ. It is one of the hardest, but I get a lot of pleasure from good outcomes, seeing first home buyers into their properties, seeing a customer get their rental property, or seeing people sell their house and build a property to get their dream home. So that's what gets me up every morning. Yeah.
Ah, nice. Oh, you've already asked the first question. Right.
Yes.
Walk us through the basic process in getting a home loan approved by the ANZ.
Okay, so if you were to look at our, I'm only here to give general information tonight, no specific advice, or I'm just laying that out straight away.
Disclaimer.
Yeah, definitely not giving any individual personalised advice tonight. I would do that with you, with all my customers in person when I see them. If you went to the ANZ website and went to find a mobile mortgage manager, you would see me and my team listed in all the areas across the country that we can come and see you. Now, I differentiate myself between a branch staff member by the means that I can come and see you after hours or on a weekend or at a cafe. We can buy a coffee or anything like that. You don't have to take any time off work to see someone from the ANZ. We've got our mobile managers are exactly that. We're mobile. We have a car, we have a keep cup for coffee, and we will travel. So if you've contacted me through our website or had a referral from a friend, I will come and see you. I'm very much old-fashioned. I'm a bit of a paper person, and I like to meet all my customers face to face, eyeballs to eyeballs, to get to know you. The process is it's pretty easy, really. Customers think that this part is the actual most stressful part of obtaining a mortgage, is getting the application through. It's not. If you've got a good rapport with your mobile manager, regardless of who it is throughout the country with ANZ, we'll get you through that process. I hold your hand all the way through. I let you know exactly what you need. I'll come to your house. I'll fill out an application form with you. I'll tell you why we need all this information, whether it's for the Privacy Act or, why do you need to know, Paula, about how much my power bill is? Why do you need to know how much afterpay I've got? And why do you need to know how much my student loan is? So we're getting a picture of what your financial position looks like so that I can put something together to see actually how much you can afford to borrow. The most important things in getting a home loan is how much can you afford to repay, how much deposit you have, and what can you secure your debt with. So affordability is your income and how you spend your money. Deposit is how much deposit do you have? Do you have KiwiSaver? Can you use the first home loan grants, whether it be to build a house or to buy an existing house? Do you have saved deposit? Now, saved deposit is absolute gold. If you've got, I can see that you're saving every week. And then the next thing is, what house do you want to buy? Is it going to be suitable for the bank to have a mortgage over it? Some houses you might want to buy that aren't suitable for the bank. So there's certain property types that we won't lend you 80%.
Like what?
But a 20%. Like what?
Sorry, like what kind of property that ANZ would not want to invest on?
Them, but we've got different criteria. So you look at a leasehold property, for example. There's leasehold properties in St. John's. There's leasehold apartments on the waterfront. And there's added expenses with those. So we probably wouldn't lend you enough for that to be your first home. So with leasehold property, for example, we'll only lend you a percentage of what the property's worth, not the land value. So there's all that sort of different criteria, and having a lending expert, whether it be with the bank, whether it be a mortgage advisor, having that set out from the outset, as how much you can borrow, what sort of deposit you need to have, and what sort of property you can buy. So that's sort of the process that I would take you through. And there's more in-depth conversations around your budget as to how you spend money. Now, I know there's been a lot of talk since 2021 when the government introduced tougher regulations on how we could test what you could afford to borrow. Things have loosened up a little bit. Now we don't go down to spent too much money on 3 coffees last week, or you spend too much money at Kmart. There's a lot of that we call discretionary spend. So us as experts, and you know as well, that if you're currently renting a property and you've got no insurances and rates and things like that, your day-to-day spend is probably going to be a little bit higher than what it would be if you knew you had to pay a mortgage and pay rates and insurances. So we have a holistic look at your budget, and then I would be making sort of recommendations to say, do you really need to do this? Do you really need to do that? What is important to you? Is paying that gym membership every week important, or would you give it up? There's certain things in my life that I would chew my arm off before I give it up. That's what I would call an essential spend. So we would incorporate that into your budget to make sure you could still afford to do that sort of thing. So that's what I sit down with my customers with initially, to get a feel of where they're at, where you're at.
While you were telling all of those, actually, I just like remember the first time that we've met. Because I was searching up online for a mobile mortgage broker from the ANZ, and you were the one who rang me first, and then told me that I was requesting for a mobile mortgage advisor or something, like a manager probably, and that and we talk about when are you able to come. You went to our place, right? And our place was like a small house, and that was at night. And of course, just to highlight this one, it's free, because other people, especially new immigrants, they'll be thinking that they might be spending money to meet a mortgage broker or mortgage advisor. But I don't think you would be able to entertain me if you don't think I have the capacity to buy a house, eh?
I would probably still, I like to visit my customers whether or not they could afford a mortgage. All right. It's getting that relationship started. And I put in my diaries, if you can't afford to buy a house now, what can you do? And what suggestions do I have that we could get you into the home ownership track in 6 months or in a year's time? And I tell my customers I'm not a stalker, but I will email you or call you every 3 or 4 months if we're looking at that sort of story as to how it's going. Is it just you need to repay some debt first? Because obviously your first home, it's more, everything looks better if you don't have much, if any, debt. Student loan, fine. Look, one little credit card, we're not too concerned with. But if you've got Q cards, gem visas, afterpay, finance companies, all of that sort of stuff, it makes it harder for either a banker in a bank or a mortgage broker to get a mortgage for you. So
Paula, I have a question. How long will that, say there is a client that went to you, asked for advice, like let's just say it's me. I am under ANZ too, but like I would want to kind of like want to see my capacity, if I can actually borrow and apply for a mortgage or a loan. And how long will you give me to actually have a very clean and tidy accounts, like
if you've got, look, I can look at doing an assessment based on affordability and deposit basically straight away. Then we'll know how much you could afford to borrow. If you have debt and stuff like that and you need to get rid of it or pay it off, that's how long it's going to take. If you had some conduct on your account that wasn't that great, if you've had a few honors and things like that, you're probably looking at about 3 to 6 months of having a clean.
6 months.
Like 3 to 6, yeah. It just depends. Each case, and this is why we don't give out sort of personal
advice. Yeah.
Each case is different.
Yes.
It could be that one insurance payment has been dishonored because your pay was out of sync with your money coming out of your account. We can look at that. But if you're a habitual spender and all your direct debits or automatic payments are being dishonored because you're taking the money out first, then that's a harder conversation as to sort it out. I like to,
but you can
tell it how it is.
Can
But
you?
I can give you a time frame.
Yeah, and then you can be as like let's just say, of course, don't be disheartened to those people who had kind of like an untidy accounts for the past months. But would you say, because you're a mortgage manager, would you be able to actually, you know what, I'll work with you hand in hand, we'll take this through after a year, I know that you can do it?
Yep, definitely. And I have customers that come back to me, or I go back to them and say, hey, and I generally ask, do you want me to email you every couple of months, or are you happy to contact? It's how the method of communication is what my customer prefers. I'm not going to force myself upon anybody, but I would like to keep in touch if we're going to work through that together. Because the most important thing for your home buyer's journey is your banker, regardless of who it is, banker or broker, your solicitor, your real estate agent, and then we talk later on about protection of your life, protection of your income. So you've got 4 people. They're the main days in your journey to buy a house, regardless if you're a first home buyer or an experienced purchaser. So
that's true.
Actually, it's really good to share that. Some people who are not sure on what to do and how they're going to tidy up their accounts, and
Finances,
somebody from the ANZ that can support them, not just entertaining them when they have the amount or just leaving them to make it alone, but there's somebody who can give them kind of an advice and assistance. That's nice.
Even our bankers in the branches, in the branches can do that as well. So it may not be, if someone said to me, Paul, I don't have any deposit at all, or I've only got 2 or 3%, so I know it's going to be a long journey, but I need someone to help me with my accounts, I would probably refer that person into our branch for advice. All right. So it's not just me. So there are, I will determine, if someone came to me directly, where the best channel is for them to go to. If you're closer to getting that house, or 2 to 3 years away, then we would work out the best avenue for you to do it. All right.
So when it comes to getting a home loan, ideally the what you call this amount of deposit that's required by the ANZ is 10 to 20, or depends.
Okay, so the government has restricted on how many customers we can lend to that don't have a 20% deposit. All right. If you don't have a 20% deposit, you really do need to be an ANZ customer. All right. But we won't do that. All right. So there's restrictions there. But if you have a 20% deposit, if you're buying the house next door to where you live, for example, Juby, you have a 20% deposit, that's the mainstream bread and butter type deals that we, or if you want to build a house and you've got a 20% deposit, construction lending, you're stuck with me for the whole length of the construction, so that we're talking regularly for about a year when it comes to building a house, so because that's how long it takes.
That's a different case.
Yeah.
So that's the main reason. Okay, carry on. So that means to say I was able to afford 10% deposit because I am an ANZ client. I'm banking with ANZ. But if not, they can move anyway. They can move to ANZ.
You can. Yeah. I'll gladly take a customer from another bank. That's what.
So if you don't have 20% deposit and you want to get a first home and you think you can afford 10%, just move to ANZ.
Yeah, just with that though, we're not giving pre-approvals. So I can talk to you and say, if you don't have a 20% deposit, if you've got 10 under 20, I can say, if you were to buy a house today, it looks like we could approve your loan, because we don't do pre-approvals. All right. So if you had a sale and purchase agreement and you'd already spoken to Marianne and signed up for a property and it was subject to finance, that's when I would be able to give an approval if you met all the conditions.
Yeah. So that's the live deal that we were talking about earlier.
Yeah.
That's the live deal.
Yeah.
But so right now, currently, Paula, just to make it understand, so we have a lot of viewers, not just first home buyers. We've got viewers that's wanting to buy a second home. So what is actually the percentage of the deposit that the bank will actually look at if they wanted to buy their second home?
Okay, if you wanted to buy a second home, there are opportunities where you don't have to provide any cash deposit at all. It depends on how much you owe your bank at the moment on your current property and how much that property's worth. So we can leverage some of the equity in that property to go towards you buying a new one. Now, generally what we see is, I've got a house, but I want to buy a better one, and I'm going to rent the one out that I'm living in now. So if there's enough equity, we can look at you not needing any cash. All right. But it just depends. Once again, we can only lend a certain amount against a rental property, which is 65% at the moment. So if we can use your existing lending and increase it to cover your deposit on a new property, you may not need any cash. So
yeah, I'm still waiting for my
increase in property values to help with that.
That's okay. Well, are there, so right now it's been a really weird journey in the, in the industry, the real estate industry, especially in buying a house and stuff. So are there anything that, so this is actually question of the second question that we have. Are there any like various government schemes and initiatives that ANZ actually can offer to home buyers at the moment?
No. I can. The property sharing scheme that came out where the government pays for part of your, I think they've stopped that at the moment. That was Kiwi Bank and Westpac. All right.
Oh.
So, not every bank bought into that one. So we don't have a property sharing scheme that you see on TV when you're buying with your uncle or your auntie or your best friend. And all that. We don't have that scheme where the government will put up part of your deposit for you. I do get requests, customers coming to me and saying, hey, do you do that? And I will refer to say, no, go and see this bank or go and see that bank, go and see a broker. All right. So we don't have any. No, we don't. You can use your KiwiSaver, you can use the First Home Buyers Grant, that's different. But we don't have any schemes that we're working with to be able to raise further funds for you to buy a property. And I think that property sharing scheme, I think they'll actually stop that at the moment. Yeah.
They've reached the total number of amount of people that's actually applied to that.
So do you mean, like, when I contacted you before regarding our plan to upgrade, but with our son joining us, is that still okay or not anymore?
That's completely different.
No, okay.
Yeah.
All right. So long as it's you're directly connected to the person, is that it? That's fine.
That's
fine. But when it's
totally different, that Marianne and I are referring to is when you don't have a 20% deposit, the government has a scheme that they can provide part of the deposit, and the bank and the government have a mortgage over your property. So that's different than
okay.
Well, I've had. So that's
you mentioned.
Not, we look at opportunities where flatmates buying together. We do that. Friends buying together. Family buying together. We do that. Mum and dad using their house as security for the children to buy. We do all of that. All right. But any schemes outside ANZ to assist, we don't do that. So we do have customers help with mums and dads going, hey, I want to help my son into a house. I want to help my daughter into a house. And we can do that as long as there's enough equity and you can afford, mum and dad can afford to repay the debt.
That's true. Yeah.
So we've got lots of different ways of doing that.
So let's say, for example, two friends would like to buy a house together. Would it still be at least 10% deposit, or you would require a higher amount?
No, you could do 10 if you met all the qualifications for a 10% deposit. Remembering though that a loan where you don't have a 20% deposit, there's a lot more fees involved. You've got what we call a low equity premium. We must get a registered valuation on the property.
Yes.
The interest rates aren't as good. All right. So if you've got a 20% deposit, If you had, say, a 16% deposit, I would be recommending that you find that extra 4% to not go through too many hoops to get to a 20%, because I can offer you better rates, I can offer you better cash, I can offer you way better. And it's the qualification, the affordability criteria is harder when you don't have a deposit than when you do have a 20% deposit, because it's a higher risk deal. So we always have to look at it a bit more carefully.
So when you're
sorry.
When you're talking about rates, because when we visit the website of ANZ, there would be specific rates that would be shown straight away, but each situation would be different, and therefore after the assessment it can vary.
Yes, it can. So there's 2 different rates on the ANZ website. There's what we call our carded rates. They're our standard rates. So if you had less than a 20% deposit, those are what rates that we're going to offer you, all right? Because it's higher risk. Then there's special offers, all right? So all the banks compete with each other. So if we see other banks going up or down, the special offers go up and down as well. There's also no harm in asking whoever you're dealing with to see if the rates can be made any better than what they are on the system, on the computer, all right? And we'll always offer the best rate.
Yeah,
so
because I've asked last time.
If we can do better than what's on the website, we will do better than what's on the website. Definitely. Yeah.
Of course, and also like
Sorry.
sorry, the website calculators, how a lot of people, what they do is that, especially like I work with quite a few buyers, and what they do is they go to a certain calculator in each bank. So what they do is they put all the information in there, and then suddenly it says that, oh yeah, I can afford buying a $900,000 property, and then suddenly they go to the bank, and then the bank says no, you can't. So what is the reason behind that? So I just wanted you to explain that to them, because a lot of buyers question me that. Of course, I cannot give the advice because I'm a real estate agent. It will be people like you, Paula. So what is the reason behind that? Why is it that the website says that you can afford this, but then the bank will say no?
We're trialing a new online application form, all right? So hopefully one day on ANZ, that'll be sorted. I personally don't like your affordability, your
calculator.
I don't like it. It doesn't take real life. It doesn't take your expenses into account. It just looks at what you've keyed in there. It doesn't take everything into account. I've also had people come to me. Oh, the computer says I can borrow $1 million.
Yes.
And you're only saying 650,000. Okay. Well, you do have to eat and breathe and pay other bills. So that's where the difference is. So if in doubt, always expect. The home loan calculator, what your repayments would be, is very handy, because I saw a customer yesterday and they wanted to compare it to the rent payments that they make. So they were paying this much in rent. I said, well, your mortgage payments are going to be this much, but on top of that, you've got your rates and your water bill and your home insurance. And if you had body corp, because you're buying an apartment, you've got that as well. So do you think you can afford it? Because there's a difference of what the bank thinks you can afford and what you think you can afford.
Yeah.
Always a difference. Sometimes you think, it's going to be easy. And then someone sees an actual repayment. You go, no, I'll leave it for a while. So,
That's so true.
Yeah. So,
Oh, right. So I think, it's a good idea if you probably upgrade that one or make it a little bit more. Oh, that's good.
I think that's the thing. Like, I think that's what I always say. Always talk. Like, I always recommend, as real estate agent, what we always have to say. I recommend you talk to get a technical advice and get a, legal advice, more than actually just, assuming that you will be able to afford this, but you've never even talked to someone else.
Oh, exactly.
Is
and
expert.
You don't know where your starting level is. So even if we don't do a pre-approval now, at least I could tell you as a customer, this is where you would be if you wanted to buy a house. So this is what deposit you have to have. Same as I wouldn't ever assume to go and sell a house, Marianne, because that's your level, that's your area of expertise.
Yeah.
I refer customers to real estate agents, go, you know, and
Yes.
buy a house with them, and I'll look after your finance for you. So
That's true.
we're all got our own little area of expertise for a customer. Yeah.
So here's another thing that I would like to share and probably get an idea from Paula, because when we had a pre-approval, of course, that was through Paula. And then Paula told us to start looking for the house. We wanted this house, but the bank said no. Remember that, Paula? Probably don't. And
We do say no time.
It's because of after the valuation. I think we've done the inspection and the valuation, but it turned out that there's an unconsented, what do you call that thing, area, and so the bank said no.
Unconsented, it can be a bit scary because you might not always be able to obtain insurance on it. So that's your house has to be insured, and sometimes insurance companies won't look at properties where there's unconsented work. And it could be just a toilet or something like that, which generally, excuse my cat. It could be just a toilet, but it could be a whole room. And if anything happened in that room and the house burnt down, you might not get insurance, because if the fire started in an unconsented room, you might be out of luck. There's also times when there's certain properties we wouldn't lend as much against. You know, it could be a rural property or something like that where you need more than a 20% deposit, but the state of the property, you know, it can be old-fashioned and need updating. Houses have had Axminster swirly carpet, and they've had mustard and aubergine coloured walls. That's fine. Dated cosmetic is fine. It's when there's structure wrong with it. If it's leaky,
yes,
you know, if you're buying a house age between 1994 and 2004, and it's the plaster cladding, we're always going to ask you for an in-depth building report and moisture test, because we don't want you to buy a property that needs work, and we don't want to secure your home loan against a property that potentially needs work.
Yes.
So sometimes.
So I have had a buyer like that. They weren't actually approved by the banks because we have viewed a property that is a leaky home, which is the fiber cement cladding outside, which is pretty much when they did the building inspection, it showed the moisture reading, and the bank immediately says no.
Yep.
And especially that I'm not sure, Paula, maybe you can explain this further, but what the buyer has kind of understood, what the bank has told them, is that if they have 20% deposit, then it's more likely it's okay. But then if it's only 10%, the bank will say no. Is that correct or not?
Personal opinion, probably I would say no, because once again, the 10% deposit is higher risk. If anything happens, the value of that property is going to decrease very fast. So you will owe more than what the house is worth. It's just not a good place to be. The weather tightness, that's always going to be an issue until such time as it's not. If there's any area of potential weather tightness through the lack of the quality of the building at that stage, we're going to be very concerned to take it or not. Better if you've got a good affordability or more than a 20% deposit, you've been in the industry. Once again, it's each case is individual. As a first home buyer, I would stay away from anything that needs much work apart from cosmetic work.
All right. So that's a good tip to our first home buyers. You know, even though you get pre-approval, that doesn't mean you can buy the house, just any house you would like, because it's still the money of the bank, and they still have the final say. They will have to look at many aspects.
If I've given you a pre-approval, one of the conversations I'll have with you is that if you're looking at any properties, let me know the addresses, and I will go onto our system. We use Velocity. That gives us an estimated market value. It gives us some information, and from my perspective, I can tell you yes, no, stay away, get some more advice, talk to your agent, talk to your solicitor. You know, if it's then the house next door to me is for sale at the moment. It's a 1950s type bungalow, 3-bedroom, needs updating. It's on a 1,000 square metre site. Everything looks fine. After the floods of last year, I'm just looking at my driveway because we got a bit of flooding with the floods last year. I don't think we're on a flood zone, but it's something that you would look at because the driveway's a bit like that. So yeah, but don't. Yeah, I tell my customers, do not make any cash offers without getting due diligence done.
Oh my gosh, yes.
And your solicitor. We can't
always
help you when you make a cash unconditional offer. So.
And I think that's what buyers don't understand. And that's what I actually feel bad for a lot of buyers, Paula, is that because in Ate, it's because I'm not saying that like there are agents that are actually they don't really ask these questions, but at the end of the day, it is more of like be a smart buyer. Because at the end of the day, as long as you're educated enough, you've done your own research and everything, you wouldn't be, of course, putting an unconditional offer to a property that you're not even pre-approved.
Yeah. And one thing also is when you're going to auction, because we've still got a lot of properties going to auction at the moment, a pre-approval doesn't cover you going to auction until such time as you've met the conditions of the pre-approval. So I'd need to know what the property is. I'd need to know that you've got your deposit, any other conditions that we haven't got straight away, before I could say, yes, from the bank's perspective, you can go to auction, you can make an offer. Other than that, you sit on your hands and you don't put your hand in the air until you've done everything you need to do. Because a lot more, once again, are still coming up for auction rather than by negotiation. So, yeah. But you can go to auction, but you do have to
do your due diligence.
Do your due diligence. I say it all the time. Do it.
Yes. So it's always working hand in hand with an agent. Go get your big team. Yeah. Create your great team. Create your trusted team. Have an agent. Have a really trusted agent and a broker or a manager, and then of course, your solicitor. That's your team. That's your A team.
Yeah, definitely.
That's
and only so much that family can give you advice on. All right, don't always listen to your family.
Yes. Oh my gosh.
They're not always right.
We felt so confident, I would say. Not probably so confident, but somehow guided because we worked with Paula when we bought our first home. And although she told us so many times that nope, not that property. And when we tried to offer on the next property, we were having a second thought whether Paula will be happy with this because we were already turned down the second time. So we were so thankful as well with Paula because she's just very straightforward from the bank's perspective, which is also protecting us. Otherwise, we could have just bought that house that has an unconsented, and of course the inspection, I think, wasn't good because of the high moisture. So it was, I think it was a blessing as well that we didn't get it. Yeah,
I think I know if Paula would agree with this. A lot of buyers don't wanna, how you spend $800 for a building inspection for a property, and a lot of buyers wanna skip that step because they think that it's okay, it looks fine, the house looks warm and it looks dry. But at the end of the day is that you're wanting to save $800 for doing a building inspection, and then further down the line after a year you'll see a leaky moisture on your wall that's gonna cost you 50,000. I don't know how much, because we have to reclad your home. So
it is expensive buying your first home, but I think at the end of the day, you're exactly right. When I bought the home I'm in now, I did everything wrong. I didn't do a cash offer though. I did that bit right. I only got a verbal building inspection, and found lots of things wrong with the property after I'd moved in. So I share my experiences with my customers to say, this is don't do this, don't do that. Yes, it's going to cost you some money, but it's the biggest thing you've ever bought. you're going to have a huge amount of debt. Regardless of how big that debt is, it's going to be bigger than anything you've had before. It's not like buying a car.
Yes.
So it's doing it right. And one thing I would say for first home buyers, especially younger, where mum and dad are helping, please don't think you can buy the house that your mum and dad live in now. You know, you need to start here. Your next house is there. Your next house is there. Then you can have your dream home. Don't set your sights too high. Don't set your sights for the most expensive suburb in Auckland, because you can't afford it.
Yeah.
Yeah.
Since you mentioned the suburb, the affordable suburb, which suburbs are those? Just to give them an idea.
I live in Waiku. Waiku is very affordable. South
But it's still
Auckland,
far away.
Yeah, I know. That is one drawback. Some parts of Takanini, Papakura, Manurewa, even if you want to travel outside.
Otahuhu.
Yeah, no, that's expensive at the moment. Otahuhu.
I think Otahuhu is becoming a little bit there.
It's a bit like Ohanga. It's a bit bougie, you know.
It's like becoming like a bit there.
But is Mangere still affordable?
We are sorry.
Mangere?
Not all of it. Not all of it. But if you live in South Auckland, go and live in Te Kaupata. You know, you can get a brand new house there quite cheap.
Yes.
And you're travelling up the motorway. You're working in South Auckland. You don't have to live in Auckland. It's not that far. It's about 30 minutes on the motorway from Papakura.
That's so true.
Yeah, you don't have to live in Auckland. So
I've sold a property in Pokeno, and that's like 1,400 square meter land for a price of like a little bit of land in Remuera.
Yeah, you need to look where you can afford to buy. Yeah, it's all lovely living in the city if you work in the city, but the prices you have to be realistic. I think is where I come in to shatter people's dreams, basically. Unfortunately, it is what it is. I want to buy my 4-bedroom, 3-bathroom, double garage. You know, you can't afford that. You can afford to buy 2-bedroom units on a cross lease. You know, out
sacrifice a bit.
But it's a start. My little, I drive past my old place. I used to live in Clendon. And I drive up my old street, my first home I ever bought, going, oh, that's where I started.
Yeah.
And I'm at a house that I'm reasonably happy with. So it's 2, 3, 4 to get where I am now. So so it's being realistic, setting your expectations a bit as a first home buyer that you can't buy the house that you're living in with your mum and dad. It just doesn't happen.
I do have a question for you, Paula. So you work, because of course we kind of have the same industry, even though you're in the banking industry and I'm in the real estate industry. But what would you suggest if I send you all these buyers that I work with, and what would you just suggest now to people? Why they should buy now? Will there any changes in the industry? Why should they buy now?
Oh, look, everybody asks me when should I buy, and it's today, not tomorrow, not yesterday, today. Your real estate agents are going to say that, your accountants are going to say that, your brokers, your bankers are going to say today's the day. You don't know what it's going to be like tomorrow.
Yes.
I know the government's wanting us to introduce the debt to income ratios. I know I saw it on your last podcast. Whether that's good for people or bad for people, that depends. But the markets, you know, we could have said, when's the best time to buy? 3 years ago, 4 years ago, when the rates were really low.
Yeah.
Life has changed. The rates that we're on now are only back what they were 5 or 6 years ago. So they're still, you know, they're comparable to what they were in someone's banking lifetime. So
Actually, and saying that, Paula, you've been in the industry for 40 years, and I have heard from my colleagues who have been in the real estate industry for like 20 years, and they say it was actually 20% before.
Wow.
Yeah, I have a lot of these conversations with dads when they tell their children, well, when I bought my first house, it only cost me $50,000, but the interest rates were 22%. Yeah, they were.
Yes.
They were.
My goodness. I can't afford that anymore.
Yeah, but our payroll.
Well, the pay was better.
you could get a bigger pay rise, but everything was proportionately the same. So, yes, the interest rates, but the term deposit rates were a lot higher as well. So it's all mixed in together. The interest rates now, they're average. Yeah, they're high when you compare them to the rates of 2 to 3% that we had around COVID.
Yes.
But they're still average. They're still eye-watering. I've just come off a very low interest rate, like yesterday, that I had it fixed for 3 years, and now I'm eye-watering. But it is what it is. And when we assess someone's affordability, we're assessing at a rate higher than what the current rates are. So if you came to me today for a mortgage and I offered you 6.7% for a home loan as the interest rate, I'm actually working out what you can afford at 9% or 8.95, so that I have that comfort if the rates go up based on the budget that you've provided and what we've gone through, you'll afford your home loan.
Yeah.
We need to, we're
There's
keeping
the wiggle room.
safe. And I'd like to think we're reasonably conservative. We're not going to give you something you can't afford.
Yeah.
And that's why when we're looking at our expenses, we have to allow in that little bit of spend, things that you find essential in your life. For example, I've got Sky, so that's essential in my expenditure. I have a little addiction to Spotlight, so I allow myself a little budget for that sort of thing. So I know that if the rates went up again, I could still afford my mortgage. And it's about that holistic, what's important to you.
Last question from me, Paula.
Yep.
Yeah, me.
Do you think the mortgage rates of ANZ now will be going down soon this year?
Look, if I had a crystal ball, I wouldn't be working. I don't know.
Nobody.
No one knows.
Look, I just see whatever's in the news. I listen to the economists. I heard that. Yeah, I don't know.
I've heard that it's going to go down.
Yeah, it is. It is. I wouldn't even know what to recommend to lock in a rate for at the moment, because people are saying do a short-term rate. Some people are saying do a longer-term rate. Your longer-term interest rates are lower than your short-term rates, for example. So a 1-year fixed rate is higher than a 3-year fixed rate. Because I listen to I'm a News Talk ZB addict, so I listen to the
I love that
are coming on. Now I can't even remember any of their names. Tony Alexander, for example.
Yes, Tony Alexander.
I listen to them, so I don't have any insight into what the rates will do. I probably would be doing a way different job if
All right, go
last
ahead.
for me, I think last question, and actually aligns to our last question as well with the one that you sent to Paula, but it is actually in line as well with what we have talked about with one of our guests, which is the one who bought from Takanini, your friend Ate.
Ellen,
so Ate Ellen, so how she was repaying it, so the mortgage repayment. Would you actually advise, Paula, our buyers or your clients to pay, let's say they're supposed to be paying 2,000 in, I don't know, fortnight?
Yep.
Would it be advisable for them to actually pay 2,500 in like higher than how much they're supposed to pay?
Look, there's different conversations for different people. First home buyers, I would say pay the minimum for that first period because you don't know what other expenses you're going to have getting into your first home. If you can afford to increase your payments, yes, by all means you can. It's just a bit harder to decrease them if you needed to decrease it back. So maybe put the money away if you're paying 500. It depends on the circumstances. I personally more than I need to, so I've set my so the more you pay, the shorter your loan term is.
Yes.
All right? And that's great, because you also at the end of the day pay less interest. But as a first home buyer, your affordability is a bit tight anyway, and you're going to have expenses of things to buy and bills to do that you haven't had to pay before, rates, water, insurances and things like that. So that's what I generally do. Just pay your minimum according to the fixed rate at the time, then just see how you go, and then look at increasing them. Yeah. Or have a slush fund. I have a separate bank account. I recommend having a separate bank account for all your money to pay your bills goes into. and maybe you put some extra money in there, and every year you can make a principal reduction without any break costs on a fixed rate loan. So that's another way to do it as well. Each case, once again, it's on. Some people can't save money and can pay debt. Some people can't pay debt but can save money. So it's sort of stylized to how you want to pay it. If you want to pay weekly, fortnightly, or monthly, depending on how you get paid, and we talk about all that sort of thing as well.
And that's what's good. As long as they work with you throughout these, if they would want to change something, they can easily talk through with you as well. A plan for them to do this.
Yep, definitely.
That's perfect. Yeah, that was my first. That's my next question.
I know. I've been in contact with Paula ever since. And to be honest, I've also contacted other mortgage broker, but Paula will always have the best offer to us. That's why we're still staying with ANZ. I mean, yeah, of course, I'm happy, but I'm still hoping that there will be a lesser rates next time because we will be refinancing. Yep, I'll keep in touch with you again.
Right.
Yeah. So there you go, guys. Thank you so much, Paula. We do appreciate your time and your expertise, your ideas, and all. This is very meaningful to all of us and to our community as well, to Filipino communities here in New Zealand. Awesome. Thank you so much.
One last question. Where can we reach Paula? So if one of our, maybe we have some buyers or viewers right now that works with ANZ, like they're banking with ANZ and they want to reach Paula, where can they reach you, Paula?
Okay, so I'm on the website, the ANZ website, under the home loans section, and down the screen is find a mobile manager, and I'm East Auckland, in the Auckland area. So, but I will come outside of Auckland as well, outside of my little patch that I live in. I can do a bit further afield than Auckland. So, or they can contact yourselves if you've got your details, and obviously the three of us are going to have our details shared at some stage. Or I can refer some people to you, Marianne, as well.
Thank you.
Yeah, anytime. And if I
thank you so much.
I've also got a lot of other mobile colleagues, even if you're not in Auckland, that I can refer you to, or you can just look on the website under Locate a Mobile Manager.
Yes.
Okay.
Oh, good.
Perfect.
That's really very helpful.
Thank you.
Not a problem.
Thank you so much, Paula.
See you next time.
See ya.
It was nice meeting you. Bye, Paula.
Right, there you go.
That was so good. Well, at least at the end of the day, we've learned so much, Ate. When our buyers go directly to ANZ, like you, so you are actually with ANZ since when you purchase your home.
Yeah, actually, that's how I found Paula. Just searching up online ANZ, and I checked that one because it's free anyway. And then Paula showed up. And from then on, of course, we didn't get an approval straight away. She was really straightforward, telling us how much we can afford. And we were like, no, we can't afford a 2-bedroom because we have 2 kids, a boy and a girl in the same room. Of course, we need 3 bedrooms.
Yeah.
So we save up some more. And then I think that was just after a month that after we'd met Paula, I've contacted her and say, I think we're ready, because she told us as to how much money we need to come up with in order to buy property, that kind of 3-bedroom property. So she has been very helpful and straightforward.
Yeah,
because she's not getting anything from us. She's being by the ANZ. So that's another thing that we felt like we're secure, that she's telling us the truth because she's protecting the interest of the bank.
As well. Yeah, and of course, like a lot of as what I've mentioned earlier, Ate, I had a buyer yesterday and they work with, they were thinking of asking me, of course, to give recommendations for brokers. Of course, I would give a list of names that I trust and that I know that my clients has used before and they were pretty fine. But of course, Paula will be added to my list right now. Like, she is such an easy person to talk to, which is really makes you feel comfortable if she's gonna be hand in hand with you during your journey.
That's nice. So there you go, guys. The 3 main things that I just want to highlight now, which Paula has mentioned, is you got to consider your affordability. I think that includes your income and the deposit. You have deposit, of course, and the type of property this is based on the ANZ criteria. So they will always have
Criteria.
the last say about the property you're going to buy because they want to protect their interest because it's still their money. Yeah. And what's your one?
And
It's
they should
really
trust that, ate. Like for me, I
yeah.
would trust what my bank says, because at the end of the day, you won't be able to buy the house anyway if they say no, you don't buy
Mm,
that. There's gonna be a
mm.
problem in the future, you know? So
Yes, that's
yeah.
right. Mm. Awesome. Thank you so much,
Thank
everyone,
you.
especially to someone who commented earlier, watching from Davao. Hopefully, you'll be coming to New Zealand soon. That's why you're following.
Yes. Hello
We've
po.
That was Mavi Marina. I'm not sure if she's still watching us. Anyway, I'm pretty sure you've gained a lot of insights from this. Look forward. Let's look forward to next week because we will be having a Filipino
Yay.
insurance broker this time. So, an insurance broker to talk deeper on the different insurance. So, I think we've kind of touched that one last week, right?
Yes. And it
Insurance,
kind
but
of touched today as well, ate. Remember how Paula said, like, remember the very first home that you guys saw and it has an unconsented work. And then she's like, at the end of the day, if the insurance says no, of course the bank will actually, no, we're not
yeah,
going to lend you.
that's right.
So it's
That's right.
always work hand in hand. And that's the reason why. That's the thing. Like, you have to have an A team.
That's right. So include Marianne in your team. You don't have to include me. I'm just a homeowner and connecting, kind of bridging the gap and connecting people here. Thank you so much for following us,
Thank
guys. Next
you.
week, see you again with an insurance broker, Filipino, so it's easy for us to talk to them. And yeah, I'm just happy that I'm growing.
Thank
Although
you
I'm
guys. And
thank
buy
you
home now. Buy your home
very
now.
much. See you next week.
See
Bye.
you. Bye.